Hey, Steve Saretsky here, as always, Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value and entertainment out of these videos, all I ask is you hit thumbs up and subscribe. Questions, comments, put those below. Obviously, a crazy, panicked weekend or week in the markets. You'll have to forgive me here because as I record this video on Friday, the speed of the news flow right now is so quick that everything is becoming almost outdated or old within 6 to 12 hours. There seems like there's a new policy, a new market phenomenon, new cases being released, stimulus, central banks. There's so much happening, and so I'm going to try to keep it as concise as possible and particularly dial this back into how I think it affects us more locally. But again, there's maybe things that I'm going to leave out here, but as I think we can all agree that there is so much happening that there's just simply no way for me to cover everything. It's truly, truly fascinating. Will go down in history books. This will be remembered forever. And the truth is everyone's, asking me about clients calling and media, and I don't know what's going to happen. I don't think anyone can sanely say with confidence that they know what the outcome is going to be. Nobody knows. Things are changing on an hourly basis, but there are things that I'm watching. There are thoughts and views that I have, and there are certain outcomes that I think are probable, and I think those are worth discussing here, and so that's kind of what we'll discuss on. But as I mentioned in last week's video, we obviously had, central banks panic, cut interest rates, and that sent markets tumbling. And then we had this, recent spew of more panic in the markets, whether that's through, NBA and NHL canceling their seasons, MLB, to further quarantines, to government policies coming out. And so, looking at Canada, we had today, for example, I wrote a piece yesterday, so this will be Thursday, and I wrote a piece discussing my thoughts on the markets here in Canada and what this was all going to mean. And then literally on Friday, today, the Bank of Canada comes out of nowhere, cuts by 50 basis points. Trudeau comes out and says fiscal stimulus is coming and we'll basically do whatever it takes. And he says no Canadians should have to worry about their rent payment, their groceries, and childcare due to the coronavirus. And then you had OSFI come out and change the capital reserve requirements, and basically say that they're not going to look at reviewing the stress test anymore. They're basically so focused on this that there's so much happening in one day that we can unpack this slowly. So first of all, we can talk about the coronavirus. As I said before, the economic ramifications are going to be massive. I find it almost comical, but in some aspects empathetic to maybe people's views on the current situation, that this is going to be a 2-week quarantine, and because of all the stimulus, that everyone in 2 weeks is just going to go back to work and they're going to live their normal lives, and they're going to go back to their full paying job and salary and wife and kids, and business will just restart. Businesses don't just restart. There's already significant layoffs happening, some of which I know firsthand. I'm not going to disclose the companies. And this is going to continue, despite, the government giving you, maybe they cut you a paycheck for $2,000, $3,000 to cover your rent. That won't get your job back. So the job layoffs are going to happen. And you have to think of it from a business company perspective. You can't simply just shut down the world economy and then 2 or 3 weeks later, 4 weeks, 5 weeks, even 6 weeks, whenever this thing eventually subsides, you can't just go back and just turn the key and start the business up and then, you know, revenues are back to what they were pre-coronavirus and everything's just humming along. It doesn't just restart like that. You know, you don't just start rehiring people and giving them wage increases. Like, are people really that naive to think that that's how a business functions? And so that's something that I'm thinking a lot about, because I think that the ramifications of this shock to employment are massive. You went from Canada having, in the US and in many parts of the world, having basically record low unemployment rates, 40-year lows. And that was what was really sort of driving the economy. Is, yes, we had weak growth. Growth was already actually slowing into this. It was a slowing economy that was at full employment, and that's obviously beneficial for things like real estate. And now you get this shock, this outside shock that really nobody really saw coming. I mean, we're basically right. Like, for me, for example, like, as I've talked about in these videos, I think that we have this sort of debt problem. And, you know, at the end of the day, I might be right that this debt bubble it blows. It might eventually just pop. And I'll be wrong. I'll be right for the wrong reasons. I never suspected that it would be some black swan event and like a virus that would tip things over. But this is obviously a black swan event. This is obviously an economic shock. And the Bank of Canada, I mean, this is something that's kept them up for years. Go back and look at all the reports over the last 10, 12 years. All they've talked about is household debt and, you know, too much debt, and eventually, you know, this leaves us in a vulnerable position because eventually, you know, there may or may not be an economic shock, and that there's little buffer for households. So this is why we're very cautious, you know, And lo and behold, this is your economic shock. The BOC comes out, panics, cuts 50 basis points. They then cut another 50 basis points today. So you've cut 100 basis points in 10 days. You now have interest rates at 0.75%. So you got 75 basis points to cut. It's not going to do anything. And so you're going to cut to zero. The BOC as of today has ruled out negative interest rates. So they'll cut to zero probably by next month. But that's it. And you're done. And you have household. You have to think about Canadian households now. Okay, for what it's worth, I'm hoping for the best. I genuinely don't want to see people suffer. I genuinely hope that as many people as possible retain their jobs and everything works out, and I genuinely hope for that. But you have to think about the situation. Let's unpack this. You have Canadian households are the most indebted in the G7, G20 next to Australia. So they're one of the most indebted advanced economies in the world. Your household debt servicing ratio is at all-time record highs, despite where interest rates are today. And you have a savings rate, a household savings rate, that is near 60-year lows. So basically what that tells me is that there's no rainy day fund. There's not much savings. Yes, some people, you know, there's wealthier individuals here, but there's a good chunk of Canadians that don't have a month, or, you know, they cannot go a month without a paycheck. That just doesn't work. And even if Justin Trudeau comes in and cuts you a paycheck, that paycheck might take months to get to you. And if it does, again, it's still not going to restore your job. So the Canadian households are in a very, very precarious situation. And so that's my ultimate concern. Now, we unpack things a little bit further. What's happening in the markets? What does this mean for real estate? The truth of the matter is I think real estate activity is obviously going to grind to a halt. Sales are going to drop off significantly. But I also think, to buffer that, I think new listings drop off significantly. Nobody wants to list their house and have some bunch of people coming in coughing and choking all over their furniture. So the activity basically will slow down and drop off. And so, and if you want to see a reduction in prices, which I think is realistic, it's possible, it's certainly probable, That will take many months, I think, to reflect that, because you have to have an inventory build, and I don't see inventory building right away because I think new listings drop and offset that. But I do think there's going to be, I think more obviously in price terms, I think that developers are going to struggle. I think that this is a huge hit to the developers. They've already sent out memos this week to myself and to, I'm sure, other realtors that they're shutting down their presentation centers, and it's going to be by appointment only. By appointment only, to not spread the virus, health matters, yada yada yada. But every month that goes by, the developer sits on inventory is added holding costs. It erodes profit margins. It makes projects unfeasible. Every month, these guys have, you have to think projects are highly leveraged projects. There's debt involved. And so all we have to do is look what happened in China. And let's take a look around the rest of the world. So in China, the second largest property developer in all of China, it's called China Evergrande. If you read an article about them about 4 to 5 weeks ago, they discounted all of their projects across China, which equated to about 300 projects they had on the go. 300 projects on the go. They discounted prices in every single pre-sale by 15%. So that's what they did. Now, this is obviously one of the largest developers with probably much more liquidity and much more holding power than probably a lot of, say, smaller developers in Vancouver or Toronto. So that is going to be a significant problem in the development space. I think a lot about the private lending space, that this is kind of in a liquid market when credit freezes up. You have people that are renewing, you have to think private lending, private loans are 1-year loans. So when they come up for renewal and buddy guy doesn't have a job, there's a good chance that he doesn't get renewed. On the flip side, you can talk about private lenders, maybe investors try to reclaim their money. I could see if you have money as in a MIC today, I could see redemptions being halted. I think that is a realistic scenario. And I'm already hearing from people that private lending rates are going up to reflect the credit risks in the system. Now, speaking of credit risks in the system, obviously those are going up significantly. We saw OSFI remove or lower their capital ratios, which basically allows banks to essentially issue more loans or to keep loans churning by reducing the value of the assets they have to have underlying supporting those loans. And that's obviously designed to try to keep liquidity pumping. But at the end of the day, if the banks are nervous about lending, which I think is going to be pretty obvious fairly soon, then they don't issue the loans. So again, you have to think about this from a business perspective. If you're a bank, you're running a business, do you issue a loan to someone in an environment where you're uncertain if they're going to have a job in a month or 2 months or 3 months down the line? Do you issue them a loan? And now we can see is what's happening is you can see it in the bond market, you can see it in the credit market, is obviously spreads are starting to blow out because there's a liquidity problem. And so you're seeing is not only, you're actually seeing now is mortgage rates are actually pushing up. Okay, you might not have read about it yet, but I can tell you with 100% certainty from my contacts that I have is that mortgage rates are actually pushing up. So mortgage rates are going up about 20 to 25 basis points higher than they were last week. Not only that, but variable mortgage rates, which typically fall when the Bank of Canada cuts rates. For example, the Bank of Canada, as I said, cut rates by 50 basis points today and 50 last week. Those variable rates, as opposed to coming down, are actually going up. So that is signs of financial stress. And so I think that's important to contextualize. Now, again, I'm not going to sit here and speculate on the direction of real estate prices. because we don't know. I don't know. I was talking to a realtor in Seattle last week, and they said, well, you guys have been hit with the coronavirus, and you guys have a significantly larger outbreak there. What's happening in the market? He goes, oh, we're busy. Like, people are sitting home from work. They have more time in their hands. They're coming to open houses. And, again, maybe that's going to change next week. But that was the message last week. And, I was talking to guys in the office. I said, well, hey, I was involved in multiple offers last night. Last night, people are competing in multiple offers on detached houses in Vancouver. So people are still out there. They're still making decisions. Again, I don't think that real estate is a slow-moving market. It's not like the stock market. We have the fluctuation on a daily basis. The stock market right now going up 10%, down one day, up 5% the next. And real estate is a very slow moving asset class. It's a lot of emotions involved. People don't cut their prices overnight. Inventory takes time to build, and it takes time for prices to clear. As we can clearly see in Vancouver, it's taken several years to see some of these higher end house prices drop. So that's kind of my thought process on it. So truth of the matter is, when people ask me, what does this mean? I think that nobody knows for sure what it all means. I think that we can clearly see we're throwing the kitchen sink at this thing. But unfortunately, as I've talked about in these videos for the last couple of years, the theme of these videos has been, listen, guys, there's a lot of debt. We have excesses built up. And the narrative has been, don't fight the Fed. It's the infallible central bank. They'll just keep cutting. They'll just keep doing more QE, and markets will never go down. And that was put to the test this week. Central banks cut, and the same day markets drop. The next day markets drop. So that's being put to the test. And when you have an economy that is so leveraged, it creates more imbalances. It creates vulnerabilities, and I think that's what we're witnessing now. Is that you already had an economy that was slowing, over leveraged, and very little room to actually maneuver because interest rates were already. in Europe they're already negative, so these guys can't even cut rates. So the ammunition, I think, is lacking. And I think that's obviously what we're seeing in markets. So that's kind of my thought process for this week. Watching it very carefully. I think that obviously, hey, if you got cash, fantastic. There'll probably be some fantastic opportunities. If those don't unveil themselves in the real estate market, they'll certainly unveil themselves as they are right now in the stock market. But again, I think it's all relative. So I'm hearing, like, on the flip side, like from the developers, their process mentality right now, and people in the real estate industry maybe a little bit more optimistic than others. Their mentality is, well, it's this flight to safety, and there's no volatility in real estate, so the money should flow out, and we'll liquidate, and everyone will liquidate their stocks and go into real estate, and that money's got to go somewhere. And I think, sure, that's kind of a valid argument on the surface. I personally don't believe it. I think that you look at it, things are all relative. If stocks drop 40%, let's just say, they're down, say 20 right now, they're down 40. Let's say they go drop 40%. I don't know. For me personally, it's like whether I'm looking at Vancouver or Calgary, which are where I recently bought, or whatever. If I'm looking at it, it's all relative. So it's okay, well, if I have, let's just say I have 100,000 liquid. It's do you put that into the down payment of say a condo in Toronto or Vancouver that's fully priced, it's at basically all time highs, or do you put it into the stock market? Let's just say you keep it simple and buy the S&P 500 index at 40% off. I just think price. I think it's relative in terms of a value perspective. But yeah, again, if you want to talk about Calgary, hey, listen, I just bought there. Oil prices, obviously, the oil market's getting crushed. The funny thing is that we're just talking about this coronavirus, and we're talking about this coronavirus. It's like sort of the economic shock, but nobody's even factored in, well, what about the shock from the oil? What about the oil shock? I mean, Pelosi alone said in his press conference last week that if oil should tank, that alone would warrant a cut. And then sure enough, oil did tank like a couple days later. And that's why he actually came out in his most recent cut today. He actually said, well, the oil shock is prompting us to cut another 50. So we haven't even factored in, forget the, coronavirus shutting down businesses. We haven't even talked about this oil shock, which is going to be just disastrous for Alberta. But the ripple effects from Alberta into other parts of Canada, I think, are significant alone. So hard to see the optimistic. I wish I could be more optimistic here and say that everything's going to be rainbows and puppy dogs, but yikes, I just don't. I'd like to see the comments below on the employment space. Anyone anecdotally hearing of people getting laid off or discussions around that? I certainly have a lot of my own, but would love to hear anyone out there that is dealing with this, if they're hearing anything, if there's any concerns. I mean, again, I just don't think that you can just start businesses back up. And you want to talk about what was helping drive, rent growth in, say, places like Toronto, Vancouver. That had a lot to do with wage growth. Good luck going back to your employer when this all settles and asking for a wage increase. You should be thankful you got a job. So I mean, wage growth alone is going to be very benign for some time, and that's obviously impactful for rents. So we talk about rents. How are other areas coping with this stress of the coronavirus? So Italy's asked for the banks to give a moratorium on mortgage payments. We had Hong Kong gave out 10,000 Hong Kong dollars, which I think is about roughly $2,000 Canadian to every citizen, but apparently that money won't actually get to the citizens until about August. And then you had, like, for example, the city, San Jose. San Jose said they brought a moratorium on rent payments. They said if a tenant misses their rent payments, they cannot be evicted. So I don't know what happens here, but I think that these are all realistic probabilities that some of them will be implemented. I could certainly see, it sounds like Trudeau again is going to cut everybody a check. But when does that money get here? How much is it going to be? And the other one is, I just don't know, how do people pay their rents? How do people pay their mortgages if this is all kind of up in the air? So those are things that I'm thinking about, and I think that we should be thinking about them too. But anyways, I don't want to ramble on. That's been almost 25 minutes, looks like, coming up. So again, there's just so much news flow here that, again, I could probably ramble on for an hour. I'm not going to do that, but I do want to hear your comments below, what you're seeing, hearing, thinking, feeling, particularly as it pertains to the job market. Obviously, a lot of people are now working from home. If that video brought you any sort of value, entertainment, hit the thumbs up, subscribe. But again, really just want to have a discussion and conversation here, because I think that these are fascinating times. So, see you next week.